Kunal, what is your understanding?
Well, I'll call it as a turbulent correction. In the last 3-4 months, we've had mild phases of correction for the indices. 4-5 days of gradual correction, 300 points, 500 points cool off for the index. We managed to come back to some sort of a mean for the index, and then from there we managed to resume the uptrend. But this is a lot more turbulent in that regards. Now, there are some very interesting data points which happened on the closing yesterday. Mild reduction in open interest, just a 3.5% reduction in the open interest for Nifty as well as Bank Nifty. So 3.5 for the Nifty and I think 3.1 for the Bank Nifty. That's the percentage drop in the open interest for the index futures, which tells you that it is a mild unwinding for the index positions, index traders. Now, the other way to look at it is that these are the kind of days where the option traders, they become a lot more active. So yesterday, by the closing, we saw a major amount of call writing. So at 19,000, it starts from 19,600 and goes up all the way towards 20,000. These are the strikes, the round figure strikes, where there is huge amount of call writing, which means on the way up, the markets would face a lot of resistance. 19,600, I believe now should be a fresh resistance for the index, and I believe that we should now try to dabble into this range of 200-300 points. 19,500 would act as a pivot support, but there would be chances that we may probably drift lower below the 90,500 mark as well.
Okay, so that's a view coming in from Kunal. But Nooresh, do you echo the view? Do you think there is a chance that we are going to be firmly below 19,500?
So the case right now is finally after a long time we've broken the recent swing lows, even though on a shorter time frame. So we've broken that 19,550, 19,600 mark. Now the case is next we go to that previous bottom around 19,250 on a shorter term time scale, or we go down all the way to 18,600, 18,800. As of now, it looks difficult to actually look at a much deeper correction because we've just seen a one-day correction across the world as well. And it was due to an event, which is the rating thing which happened yesterday. Now the case is, at this point of time, one needs to be more strict with their stop losses. So some of the stop losses got hit yesterday on the long side. Some of them could get hit today if it continues on a follow-up. But overall, the view is we could go towards the 19,250 mark. On a rise to 19,700, 19,750, if it happens, that is a point of time where you actually have a short trade with a decent risk reward. But at current levels, you want to be selling on a rise rather than doing a major thing. Take time to take some bets off and wait for either a decent correction or start finding new winners.